Are you a business owner that doesn't understand how your LLC is being taxed? Hi, I'm Zach Bryant, an owner with Bryant Associates accounting firm. And we oftentimes run into business owners that have an LLC that's set up but don't exactly understand what that means for tax purposes. And for starters, there is no LLC tax return. So when you set up an LLC, there's three ways in which that LLC will be taxed. If there is an individual owner, it's going to default to being taxed as a sole proprietorship. And what that means is you are going to have a Schedule C. All your business income and expenses are going to be reported on your personal income tax return. If the LLC has more than one owner, then it will default to what is going to be called a partnership. And with the partnership, you are going to receive a K1. K1 will either have your business income or the business loss, and that will be divided based off of how the ownership is divided between the partners, and those K1s will then be reported on their personal income tax returns. And then the third way is doing what is called an S election, and that is filing as an S corporation. So whether there's one owner or multiple owners, an LLC can decide to be taxed as an S corporation. And there's many benefits and differences between those three different options as an LLC. But the first thing as a business owner is to understand an LLC is not a way that your business is being taxed. There is one of those three options on how you're being taxed. We oftentimes run into business owners that are set up as an LLC that are not operating their business as efficiently as they can for tax purposes. It's oftentimes they're missing out on some major tax deductions, and oftentimes not following the proper rules based off of how they've decided to be set up with their LLC and how they're being taxed. One of the biggest things that we see is when a business owner decides that they would like to draw a payroll from the company. So if you are a sole proprietor, you will not draw a income or you will not have payroll from your company. All your business income is going to be subject to self-employment tax, where if you are set up as an S corporation, you can and should be on the payroll of that business, and your business profits, so what is after your payroll, is subject to state and federal income tax. And that is where there's some large tax benefits to being set up as an S corporation. Now, for every business owner, it may not make sense or tax sense for them to make a change of that magnitude to be changed from a sole proprietorship to an S corporation. But we often see large tax benefits to business owners, and what we do when we onboard any new client is we go through what is called an entity analysis, and we break down and show them the different options that they have and what the tax benefits would be to them. So if you're a business owner that's out there that's set up as an LLC and you're either not aware of how you're being taxed, or you're set up as a sole proprietorship and believe that you're overpaying in taxes, reach out to us today. We'd love to sit down, have a conversation about what options you have, and see if there is some tax savings benefits available to you.